look at it or break it down in terms of first principle, one of the most important things at the beginning is to identify what you're doing and who is the right financier.
And private equity funders are very meticulous when it comes to financial statements, what's your income statement, your balance sheet, what's your assets against your liabilities. Very, very, because they're like accountants and auditors, so you can be sure of that.
I can take your commentary from that's what I'm thinking in my head, but it's like, what value, what do you want exactly, right? Like, he came to me, I didn't go to him. The value exchange has to just make sense for him. Like, you're giving me access to this, you're basically saying all of our resources, or a good number of our resources, you have access to it.
Right? A lot of people focus more on product. Product is important, you need to solve right. But how can you get distribution very fast without having to reinvent the wheel yourself?
Good afternoon. My name is Olaide, and I am the founder for Mega Apps Limited and Grand Alpha Tech Hub. So I'm new in this line. I just started my business last year, and I've been able to raise some funds bootstrapping, but I have had issues like management and all of that. Imagine preaching the gospel to others and me myself, I'm not experiencing that gospel. I'm not experiencing the peace in the gospel. So, which is fundraising, because I actually do fundraising for my clients. I help them with funds, because that's one of the services I provide. So, I myself have not been able, because I have a tech hub and I want to establish a physical set, but the capacity is not there. So, how can I position myself to meet the right people and get the funds that I preach to others to get? Yeah, thank
you. Specifically, what does your business do?
So we do risk and debt management, fundraising, IT consulting, and market research.
So it's a service business, there's a lot of advisory.
Yes.
You guys are actually facilitating the connection between the people that need either funding or advisory with people that can provide it.
Yes.
And this is predominantly debt or equity as well? Equity in the sense that somebody is getting a stake in the business, or is it just a loan, like private credit?
Both. Yeah.
Can you give maybe a profile of who funds, an example of a deal that you facilitated?
Okay, so like I said, I started last year. So I myself am like an example, because I got a grant to which I started the business.
Okay.
So and I felt others too would be in my position, needing grants and all of that. They don't know the right people to connect with, where to go to. So that's why I started that service business. So now I have a current client I'm working with. He needs investors. They're working in a very big project called Etc. It's a blockchain technology that helps to digitize tokens. So and also I am a tech person. So I'm currently the CTO for that organization, but I have to raise funds for that business. Now I'm finding it difficult, because that's the service I render. I'm finding it difficult to find the right investor for that project.
Okay. So first things first, I mean, you're doing brilliant. You do a lot of things at the same time. I think you do have it's clear to you that you're stretching yourself significantly in terms of the areas that you're operating in.
Well, they are actually mutually dependent. So
Okay.
Yeah.
So I think if you look at it or break it down in terms of first principle, one of the most important things at the beginning is to identify what you're doing and who is the right financier. So the person that's going to finance an SME may not necessarily be the person that's going to finance a tech scalable startup, which is what VCs do at their core. The person that's actually going to provide some level of debt, let's say at the early stage, may not be banks, for example, are actually senior debt providers. That's why they don't flood the market. The market needs more private equity, private credit in many respects, or micro as such. So I think the main thing is to identify the profile of investor for the profile of business and the stage, because even within those different funding or financiers, some of them fund at different stages. Like in that particular segment, there's also going to be a person that funds per stage. So it needs to be clear. You need to do some mapping that fits business or industry with the right type of financier as well. Now, from a high level, that's what I would think about it in many respects. You need to start from profiling.
So how do I get such people? Actually, that's my question. How
So-
do I get such
so the way I'll put it is, it's not like a snap of a finger. If I ask you, for example, now, you want to fund like this project that you want to do, the question is to say, what is the profile of investor that funds crypto, for example? That's how you need to start thinking of it first of all. By the time you say, okay, there's a particular founder for crypto, what investors, whether angel, institutionals, who is in that line, and what that does for you, it makes it easier. So you don't go having conversation with the type of investor that is not necessarily interested in either that type of funding or that particular industry. So it's profiling and mapping. Once you start there, everything builds from it. It's like first principle thinking. You build it fundamentally, then it grows from there. That's it.
Yeah, I think we should be starting up. Yeah. Which is you asked two questions, right? So was asking about service in terms of our business, but you also asked about the other technology blockchain. You need to understand that, like you said, don't bring the understanding and what we see with technology to say people will just fund like your service business. People rarely fund, like you would rarely see VCs fund a service business. Most of the time you see private equity that goes into that, and even that the business has to have been built to some stage. And private equity funders are very meticulous when it comes to financial statements, what's your income statement, what's your balance sheet, what's your assets against your liabilities. Very, very, because they're like accountants and auditors, so you can be sure of that. But what you need to think about is, when it comes to your business, why do you want to raise funds, really, is the first thing, right? What's the reason why you want to raise funds for that service business? Is there a reason you want to raise funds? Is to hire more, or because there's not a core technology like you have for that kind of service business? Do you understand? You are majorly like consultancy and advisory, right? So it could be bootstrap, or it could just be family and friends around. Sell your vision to people that they understand this is where you want to go to, and they can invest in that, right? So it could either be equity or debt, right? For the other business, which is core technology, you are literally building a technology product on the blockchain to solve a problem. Go 100% what you have said. Understand the business, the VCs and the players in that vertical. Understand what stage, like you mentioned, I think you are very early stage, so you need to understand how can I find early stage investors or angel investors? Where do they spend their time? What are the things that they look out for to invest? Have we even gotten to the stage? We have a certain stage of traction, or are we trying to look for funding at an ideation stage and things like that? When you clearly identify that, then you now look, what type of investment are we looking for? Are we looking for grants? Are we looking for credits? Are we looking at actual debt or equity? Then that would also clearly understand the people you want to go for each of those categories, because the people that are in grants, in credits, are very different people, and the things that you need also can help you, because a lot of times people say they want to raise funds. Sometimes you need funds for like technology things. It might be best to just go for like people that give you access to credit and infrastructure, AWS, Google Cloud, all of that. I would take care of maybe 50% of what you need money for, and you can get a runway for like 6 months, right? Because they won't give you that money, but you can get access to that in technology. So identify that, map it out, and then you take action from there.
Okay, I mentioned something that you omitted. I said I'm raising funds for a tech hub.
Hub.
Yeah.
Okay. Because I heard blockchain and
That's for my,
consultancy
I said I'm
for tech
currently
hub.
for my client. That's for my client.
Okay.
Raising funds for my client who has a blockchain project.
Yeah.
Then for me, I said a tech hub. Like I'm raising funds for a tech hub.
So brick and mortar, right? The tech hub is brick and mortar, like it's a place. Oh, like project finance. It's still service. Let's still look at it. It's still service. So go with the service structure.
It's still about finding the right profile of investor for that particular asset
Segment.
class. That's just the fundamentals, to be honest. If you a tech hub, for example, a tech hub falls within that segment of incubator to accelerator. In a way, you're trying to incubate certain tech talent. It could be a venture studio or a bit of venture building or whatever. But that particular segment is the same people that would actually allocate capital to maybe not the fund, but to those particular builders or profiles of startups per se. That particular fund that it could be family and friends. I don't think family and friends are even going to cut it. You need to an extent something institutional. You need something institutional, or you could go with a CVC. So you could go to a corporate, and that maybe you could go to a corporate, and let me give an example of a bank. A bank is looking for plugin of a tech to their stack, and they might need to kind of like acquire or they might need to incubate it before they can get it into their stack. You say at the end of the day that you've built this particular hub that enables you to get the best fintech deals, but I need funding to facilitate it to move from point A to point B, which would be in your interest. So it's the same thing of finding first principle, find out for what you're doing who is the best fit, and you build from there. And it requires like thinking, like breakdown. Just that's that.
All right. So if you're just joining, we've started. What you're basically doing, if you have any questions that relate to fundraising, growth, or product/engineering, you can ask our guest. So Daniel just joined us. He's the CTO at Sycamore. So if you have any product-related questions, you can direct them to him. So who else has a question before we start with you guys on that?
Hi, good afternoon. Good evening, guys. So, good work. I know you guys work so far. So, I want to ask about growth, right? And I want to talk about managing growth. Okay, yeah. So, I want to talk about managing growth. So, I work with a firm that we use private capital to finance commodity trades. So, an average trade size, for instance, could not about 20 million to about maybe 70 million. And we're doing those trades well. But sometimes we have capital partners that will reach out, hey, Sam, why don't we do as much as $3 million, right? $2 million, an average trade. So there's capital available, but you don't have that growth. Like, you're not equipped for that yet immediately, but you don't also still leave money on the table. How do you manage such growth, right? So it's a key concern for me, and I would love clarity on that.
Okay, so I'll take it in this way, right? That you need to look at, because there are different ways where you can solve that problem. There's definitely building infrastructure to be able to take that in, right? And which is capital intensive, whether you need to pump that money yourself and you need to invest. To go back to business strategy, there's also partnership, right? To say, do you want to mitigate the risk, like you want to reduce your risk exposure? So rather than taking on that infrastructure and building everything yourself from scratch in order to take that capacity or have that capacity, you would rather have a partner do that, but your margin will be lower, right? I typically would always say, I don't want to burn all of my money to build something I haven't fully, what's it called, validated. What's the frequency of that trade volume? With $3 million, will it continue to come constantly, right? In terms of you can increase your capacity to that. So those are two angles I would typically make my decision from. Once I understand that, okay, I have the capital to scale and I can do this myself, do I need to do it now, or do I start off with partnership? Because I'll give you an example of what we did. There are certain solutions when we came to advertising technology set, right? And we wanted to scale into a bigger vertical, like business segments. Okay, so those guys were like 100 to 100 million in a monthly basis, right? When we started off, we didn't go and say we're going to aggregate all of these ad networks. We're going to build an ad server that is going to handle 500 or like, sorry, not 500, like 20, 30 ad exchanges. And then when we do that, we now build capacity and get a team who will then manage campaigns and then be able to provide those conversions for these businesses. We started off by saying, let's reduce our risk, right? Rather than spending a lot on ad server and all of that, can we start off small and look for partners that is able to deliver this? Our margins are lower. Once we validated that, okay, there's actually a business line here, we didn't stop what we were doing. We then switched to now say, the phase 2 of the project is, how do we then go out and build this thing ourselves? And we didn't go, like today, we're not building everything from scratch, but we're building certain parts and we're taking ownership of part of the product so that our business margin improves. We have the capacity to also continue to deliver. We have that business in-house. By the time we get to phase 3 of the product, which is then having the entire stack fully built by us, right? We will then improve our business margin. But we are still taking that same amount of business volume, but our business numbers are different. So you need to look at it from your point of view to say, do you have the capacity to build that in order to handle that? What's your risk exposure if you do that as a business because you're investing money to that? Do you want to go with partnership? It's majorly a business strategy decision and then how you then validate that. But I can let anyone comment on that.
So let's try to understand your business. You say you guys are focused on commodity trading. Okay. Okay. So when you say, is it, just break it down to me. What commodities? Okay. Okay. So it's private credit. Yeah. Yeah. Okay. 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 So the concern now is that you're concerned that you might grow too big or. Yeah. Okay. Mm.
We have enough of $2 million, use it to do larger trades. So we don't want to leave that money on the table, and yet we really don't have that capacity yet to manage those larger trades. So it's like you managing, we don't, you are torn between those things.
Okay, it's good you said your tone because you strike me as if you've answered the question already. You've answered the question already, and let me tell you how. So everything has kind of like a return and risk profile, which you would know. The reason why you're presently doing the trades that you are, like facilitating capital, is because from a risk to return perspective, you're comfortable with it. It's not about kind of like supply of capital to you. It's whether you have good deals that can meet that return ratio. And what it sounds like is that you have more capital coming in than the number of deals that you can allocate to. And what that means, and what that, if you do that, if you supply capital to deals where you're not going to get anything on the output side, you're going to lose. So what you need to do is focus on risk profiling so much so that you can allocate, and I think that's where the blocker is. It's not on the capital. That is already clear. You need to make it in such a way that those particular other deals are as investor ready as or capital allocative ready as the ones that you have currently. So I think that to me that's where the blocker is. I don't know whether that makes any sense.
I was going to ask, right, because what other players are in your segment? Like people because if you have the cash, right, like you technically have the cash, you need to find more deals to fill that without taking, like, but yeah, maybe the word more scale, but you need to be careful. Like your risk assessment has to be good to say you don't want to take on too many deals where you can't, pay back on your capital and things like that? Are there other players in the market, one, that does what you do? Then the second thing is, do you already have like active deals that you're not even funding as well right now?
Yeah, so for the kind of players, they don't have that model. So we can look at Capsa, right? Capsa uses invoice, not working capital or like export financing or supply chain. So they are in the same vertical but different line. So do we have pending deals? Yes. So sometimes the financing appetite of some of our capital partners really differs. Some minimum cap they want to do sometimes is 100 million. And we could have trades like 40 million. So the extension, we have deals but they are not fundable because it doesn't meet that threshold. So yeah, so those are some. Yeah.
I think to just make it frank, if the deals are not fundable, there's no case for growth. There's just no case for growth. If you, it depends on the type of risks you want to take as compared to what the returns will look like. You don't want the scenario where at the end of the day that because you have capital sitting down, that you allocate it to deals that instead of you to see return, you see losses. Yeah. So if you're not, if based, I would like to believe that you guys have like a framework where you assess what output you get for every input. So if you don't have those particular deals that are fundable, that are backable, that the risk profile makes that much sense, there's no case for growth. And it's staring, the thing about the truth is that it's evident. It stares you in the face. There's no explanation, it just stares you in the face.
Do you think we should increase more on the deal side, on the deal part more, or on the financing part more?
I don't think you have a financing problem.
We don't have a financing problem.
It's maybe when it comes to maybe the financing, is the profile of the financing. Is that finance, if the financier is okay with certain risk level, then this, but at the end of the day, I don't even think that's even the problem. I think the main thing is what output are you getting for every input.
You might also look at your deal, because the way you mentioned, right, you said the other players have a different business model. There are two ways. You need to either improve your deal sourcing to get similar deals or more deals that fits what you're doing, right, so that you can fund with that, or you expand your business growth in terms of that capital that is available and a different deal structure, not what you currently do, which is a totally different arm. You have to be able to explain that different deal structure to the capital, right, that you have, to say this is not what we fund with, this is a totally different structure, these are the risk involved, this is the potential return we're looking at, are you able to allow us fund this based on this different business case and all of that? Then you will now see that you have different type of deals and different financial structures, so that your cash understands that $2 million is going to fund different type of business structure and different risk exposures and returns. But again, I trust you have your numbers, so if the risk is higher, trust those capital to say they want more money, right? But at the end of the day, it might make no sense. But again, to reduce, I would always go for partnership. I like going for validation before I take on an entire risk. You find partners that have the deals with a different structure in the market, and you can say, we have this money, we want to be able to fund, we don't have enough deal structure, right? What is the spread we can have on this, so that they already have that deal? Your money can make more sense to those people, right? Provided that your deal financiers understand the structure of that business area, and you can expand. By the time you have enough, maybe capital and all that, you can gradually start to take that part back internally to your business, so that you then have that as a business unit without increasing your business exposure and things like that.
Yeah, that sounds. Thanks, man.
Good evening. My name is Bankole Eunice, and I'm a product sales specialist at Access Technology Limited. So we digitize estate management. My question is, what is the most overlooked growth strategy for a business-to-business startup?
That's how really. You know,
When you say overlooked, is it overlooked that it works, or overlooked that it doesn't work, or overlooked that it's nice to have?
like low hanging fruit that people don't implement but works. Is that what you mean?
Overlooked in the sense that it works, but you're not making use of it.
Like low hanging fruit. Yeah, I was about to say partnerships. A lot of people, yes, exactly. Majorly collaboration. You need to look at and it's distribution. Right? A lot of people focus more on product. Product is important. You need to solve right. But how can you get distribution very fast without having to reinvent the wheel yourself at times? Which means I call something adjacent product or complementary product, which means they don't directly do what we do, but they have their same clientele have a need for what we can solve, which fits into their current product. So, for example, give you something very lame to be very example. You go to the petrol station, right? You want to buy fuel, right? You're going to meet the fuel attendant and they tell you, we don't take transfer. But guess what? They've collaborated with the POS agents, right? That is sitting inside that petrol station as well, right? Where they have a partnership to say, I'm going to send you this number of volume of people every day for your business, and you're going to pay me 5,000 naira every day, or 5% or 10% or 2%. So the full attendant is providing the pipeline, right, for that POS agent, even though the core of what the POS of the petrol station attendant is selling fuel, but there's an adjacent need which is cash and financing to be able to buy what they need and solve their problem, and it doesn't affect them selling what they need to do. So the POS person is able to supply that cash to the person, which is then able to then provide it. So the attendant is providing business pipeline for the person and giving a cut back to that person. And the business finance, the POS agent is providing financing for the people to be able to buy it. So I think partnership is very, very key to understand what is your who currently holds distribution of your product or your solution, right, as a whole. That can be an adjacent product without having to conflict with it. A lot of times what I see people do is a lot of businesses go in partnership and they're just thinking about themselves. I want to partner with you. We have this API, we can give it to this, it can be a feature. I'm like, why do I want to install? Like because a lot of times people don't think that if I'm bringing something to you, I'm going to put time. They don't quantify that. Like, okay, I'm going to put resources to this. I need to assign engineering team to this. I need to assign product team to this. And it's an opportunity cost of that time they're using to integrate to your product that they could have used to do another thing entirely. So, what's the business case and business value to me before you start talking about what it does to you? So, always put yourself in position of how do I solve this problem for this person with an adjacent side of my product solution. I hope that I think partnership is something that people miss a lot, and people that want to try it, they get it and approach it wrong.
It's literally the lowest hanging fruit. Okay, so I think this question will be for Daniel. Yeah. Should I hire an in-house developer or outsource product development at the early stage? Should I hire or should I outsource? That question is tricky. Do you have money to hire? Do you have money to outsource? I mean, I think both of them are expensive in some way. I'll answer it this way first. Me personally, I would hire, and I like to sweet talk. I'll hire you even if I can't pay you. I would get you to like maybe believe what I'm doing first. I like to have somebody that understands the vision of what I'm building first before I say a development team handle it. Right? If I get maybe I won't go like trying to hire like 7 people or 10 people, or I just need one key person. So maybe I'll do a mix of both. Hire one key person, right? You probably be like the engineering lead or whatever I choose to call you, whatever I choose to call yourself. Then from there, maybe, just maybe, we can outsource. We can, because what I've seen, and I have been in both cases, what I've seen is when you outsource, it's easy for them to give you, to check boxes and give you, right, what you've paid for. But someone that understands what you're trying to build, maybe it would not just be about checking boxes. you can bounce ideas off that person. Yeah, you would argue that some outsourcing firms, right, would bounce ideas sometimes, but it's like it's very transactional, right? Give me my product, I give you your money. If you can also argue that it might be the same thing with the person, so that's why I said I like to sweet talk first, right? Let's have a relationship. I hire one person, we start building from there. If we need more capacity, then we can bring him more hands. But I think the final answer really to that is personally, I would hire first, right, before thinking of outsourcing anything. And that's been my thing since say I when I joined Sycamore. Just go and find them where they are, the talent. Outsourcing is like last resort for me personally. This is my own personal opinion. Yeah.
Okay, so I mean, I guess that's because you're also technical.
Yes.
So what if a founder wasn't technical?
What if a founder? So I've been in situations where Daniel, come help us with this thing, right? I think there was a time I was inclined to say, you know what, outsource it. It depends on what you as a founder you're looking to do. If you're trying to put out your product really quick, then maybe outsourcing would be best because hey, they will check the boxes very fast. Their business is on the line if they don't give you what you need fast. Right. So it depends on what I need as a product owner or a product manager really. Is if I'm trying to quickly put out something, maybe I'll outsource. Maybe I'll advise you to outsource if you have the money to outsource. Right. Yeah. If you want to build slowly, build people that would build trust, that would build with you from day one instead of just ticking boxes. If you have the time and bandwidth and patience and everything to build slowly, maybe hire people as opposed to outsourcing. So just on a final note, right? Outsourcing most times it just tick boxes, right? If you're lucky, if you hire right, you get people that buy into what you're building from the day one. Yeah.
Okay. So I would ask you a follow-up question because of something else that you mentioned. You talked about you're in a hurry to get your product out into the market. How can someone balance that? I want to get my product out into the market, but I also do not want to just push out just any product. So how do you balance those two priorities?
Let me tell you a story. Very interesting story. I don't think it's public knowledge, but when I joined Sycamore is a very fantastic company, and I'll tell you why. I think the co-founders found a way to build the product without technology first, right? So there was a solid operational structure. They could sell without any tech, and they did that for over a year. So when I joined, it was a question of okay, we need tech to like move more mountains, right? Just scale, right? So I asked Tunde, what do we need today? Tunde said, we need our own core banking software. We agreed we needed our core banking software. We didn't want to outsource. We didn't want to leverage a third party. I said, okay, what else? We need onboarding of users to be seamless. Because we're relying on a third party, it meant that whatever that third party asked for was what we would ask the users for. We didn't have any control over that. So I said, okay, you know what? Bearing in mind these two things, you guys have run a beautiful business for over a year without any solid tech structure. So what we'll do is we'll take the loan, investment, and the onboarding as priority. So what I'm saying here first is MVP, right? There's a whole ocean we're trying to build, like a whole house or whatever. But what are the most important things, right, to put out there? For us, at the time, it was onboarding, it was making sure a salesperson could sell a loan on our system, right, without relying on any serious third party. So a lot of it will still be manual, right, but the work will be done. Then for investment, we should be able to onboard investors seamlessly and quickly. And that's why I took. And I told him, I'll give you this thing in a month. That's what I told him. And they thought I was crazy. And I gave them in a month. And I think it was only me and someone else at the time. So for me, that's always been thing from day one. Just what does the product and or owner want, right? Balance for me would mean what exactly is the MVP. I am very ruthless when it comes to scope creep. I hate it. I hate organ driven development. Yes, you want this, no wahala, backlog. Just keep pushing it. This is what we said we'll build. Yeah, it has its downsides, right? But I think the pros are outweigh the con, right? We do exactly what we're supposed to do, right? You wanted this. Yeah, market is changing. I understand that, but let's put this out first, and that's what we did. And after 4 years, I think we're at the point where we can resell our CBA. We're at the point where we can resell a lot of things, right? That we built internally now. So in my head is it's just MVP. Define it. Pray to God you have an understanding product owner that understands what MVP is. Don't tell me, don't wake me up. Today is wake me up. I know if he sees this, we used to talk like 1 a.m., 2 a.m. about what we need to do. But again, I say, boss, this is what we need to get out first. After this, every other thing will come. And yeah, that's what it is. I think more product owners need to understand that you have like time, except if you've collected investors' money. But a lot of time, there's time. Just define exactly what your users want or what you want, what problem you're trying to solve. Like your problem can be very big, but you can't solve everything at once. Just one after the other until you get there. You get me?
All right. So I think we'll come back to you on that because I still have a question on how do you communicate this? How do you manage that relationship with as a developer now or as a founder? How do you manage that relationship with your developers or even with your outsourcing firm?
Good afternoon. My name is Chui, co-founder with Dala Technologies. We partner with consumer goods companies to help them build their businesses through modern retail. So we grew out of another company that did that for 12, 15 years, and we figured some things out that helps other growing companies scale in supermarkets specifically. The question is actually dovetailing the partnership angle. We know what we do well, and we've been seeing other SMEs that we've been collaborating with or trying to collaborate with for different portions of the business that we're growing. And I've been specifically trying to recruit other founders of smaller businesses to join as co-founders to take on different parts of whether it's marketing or engineering or whatever of the business. But I found it very difficult to sell, my small thing and your small thing together could be very big. Like everybody kind of wants to do their own small thing. So I'm curious if you've had any experience or any success with partnerships that are actually framed as joint ventures, that it's not, outsourcing this function that actually does turn to just ticking boxes and checking boxes and actually kind of making one different vehicle from 2 or 3 separate skill sets or different functions within the organization. I'm not sure if that question is clear. I hope it is.
Essentially, you want them. Okay, say you're talking to me. You want me to drop, maybe not drop, but like make my small thing smaller, so we could build a bigger thing.
If you had an agency saying we build apps, so why don't you become CTO, have equity in this organization, and fulfill that function for this organization? So still do your thing, but within an entity that could be bigger than you doing your thing on your own.
That's tricky. It's a bit tricky.
You have to be very good to this person, like very good to this person. Because at Ejimone Street, Nigerians, and I've seen it because I've seen it, we like to own our thing, like in quotes. Like people would just rather have their own thing, which most of the time I say 10% of 100 billion is better than 100% of 2 million naira. It's like disappointing, right? But you also have to understand that the person you are asking to join has also invested a lot of time, resources, and everything. So it's not like they are myopic or they don't get what you're saying at times, really. We also have to consider that they've invested a lot
apart from the sentimental reasons, like actual resources that have gone into that. So you need to be a pretty good salesman for them to understand why they should have a joint venture and do what you come together as a party to build what you want to do. What I could do if I was in your position is to say, it's again, I'm not saying it will work, but I'm just thinking top of my head is, rather than them like closing down everything and merging with you, is there a way that you can already even partner today and go to different parties as one entity without them having to stop what they're doing? So for example, you say supermarket, you want to go to like a bigger supermarket, maybe Spa, right, a bigger chain store, and you want to show that you have capacity to build and to solve their problem that you typically wouldn't. Again, I'm just assuming, right? And you typically wouldn't be able to do that as separate entity. So you collaborate as one entity without having to stop what you're doing, but you present a front on the bigger entity as one party, and then the execution point of view, you do it together as a partnership as two companies, right? If you start off like that and they see the value and the impact, maybe it's then a little bit easier for them to say, maybe we should come together. Also, you need to remember that there's also the point of partnership. Like, we need to understand each other. I need to know you. Like, I can't just wake up and just ask Franklin and say, come and join my problem. Like, yes, we have this courteous conversation on stage, but like, he doesn't know anything about me just yet, right? There needs to be that trust that will go, because with anything about business is that you will have disagreements as founders, right? But when you have the core values, right, you can disagree without having to rift and split the company, because we've seen that happens even for people that are pretty good friends. So maybe that's how I would say you should approach it, but you need to be a pretty good salesman, right, to make that work. And you could do that and see how that scales for certain type of businesses. Some people might never come on board, right, but some might kind of catch the vision and be like, okay, maybe we want to run together as one with this.
Isn't that at the expense of their own small thing?
Exactly. It is, which is what I said. It's not the, it's very tricky. It's not the blazing gun. It could work, it could not work, but I usually say, like, why did you just give it a shot? If it doesn't work, you're still where you are anyways. You don't have anything to lose.
Okay. Franklin, if you want to add to that, especially let's say we've gotten past that first stage of we are now cool with working together. The deal making, which is where a lot of disagreements will probably arise. Do you want to share how you can get around some of these things?
They've already invested energy, they may have invested money. Like, how do you value that? That's one angle. The second, with the example that you gave, going to Spa, for example, what we do is we know how to get there. We know how to get you on shelf. The other element now of how to get people to know that you're there is something that we could build out on our own, hire somebody to do that. And for me as a founder, it's like, well, like, I need to trust somebody to do that. I know somebody who's already doing that well, and they're trying to sell that service to multiple companies. Look, we have the companies for you. So it kind of makes sense to come in and you now do that part of our business. So we've been very clear and specific in telling our clients, no, we don't do that part. We only do this part, and we're doing it well.
Yeah, well, that's
that
tricky,
would add
right?
to it.
Sorry if I do. That's tricky because I get you, and you literally give them the supply and the distribution, right, for something that they have capacity to fulfill, right? But also on my business side, right, if I'm on the other side of the table, you are holding the entire leverage in that point of view, because my single point of risk is extremely high. What happens if tomorrow you say, you know what, this is not working out for me. I've dropped everything I've done. I've dropped all the investment. You also have to think about the risk mitigation for that kind of person. That kind of, like, the deal structure has to be pretty good, but I'll let Franklin think that. You have to build trust. I don't think you can just like.
I don't know that you can trust that maybe the value exchange has to be really good and like, yeah, it's worth the risk. Maybe before Franklin goes, because the interesting thing is while we're talking about it, so I run something on the side, and at the point where I'm trying to set up like a community from scratch. Now, I recently came in contact with someone who does something similar but doesn't have the finances, the structure, but they have a great community that basically relates to everything we do. And the guy is saying, let us partner. But I'm like, yeah, I can easily take it away from you. Like, I can take your community away from. That's what I'm thinking in my head, but it's like, what value? What do you want exactly, right? He came to me. I didn't go to him. But now that I'm thinking about it, if I was going to meet him instead, maybe I should be thinking of the value exchange has to just make sense for him. Like, you're giving me access to this. You're basically saying all of our resources or a good number of our resources, you have access to it, right? I have to give him something that makes sense because it's risky to him if I start what I'm doing, take away or maybe take away his community members in quote, then I mean it's very risky. So the value has to make sense for the person to the point where even if push comes to shove, something happens. Uh, it is what it is. It's business. We win some, we lose some. I understood the risk. The value made sense at first, yeah. So that's what I think.
Um, so to me, it sounds like you're talking about partnership, but to an extent, you want to hire these people. Yeah, but you want to hire them. That's how they are going to approach it. So the question now is, at the end, the dynamic will be how much leverage do you think you have while understanding basic human nature. So what they were speaking to was person may not be doing the volumes that you're doing. Person is comfortable with the volumes they are doing. So you come to tell them that it's going to be one big coming and everything. You not even you don't work for the person. You don't but you can harmonize interest. You can harmonize interest by keeping them independent but having that particular partnership structure where it passes through them. And over time, because at the end of the day, you need to make the case to them of why they need to move to you. And the best way to do that is keep their interest, like harmonize the interest by keeping them independent in partnership with you, or facilitating the thing you want them to do through maybe a sharing agreement. Then as it grows, it will be evident to them that it's in their interest to be part of you. I don't know whether I'm making any sense to you. So you're trying to look at it from the perspective of you may not see it that way, but you're looking at it from the perspective of your own interest and opinion. I don't think you're considering their own interest. Yeah, exactly. So I don't think you're considering their own interest. What you feel as considering their interest is like, oh, it will be people, and it is not good enough. It's not good enough. The main sticking point is human nature and control. Where they are good. Especially if they are not begging. If they came to you begging, you have leverage. But if they are on their own and good, then you now look at the big picture and now say, okay, I need to get from point A to point B, but it requires them in between. I may not be able to bring them out, but how can I plug them in so much so that they stay where they are? They stay where they are. They get a portion of what drives you to point B, but they don't move completely. So it's about, in a way, it's harmonizing interest. Yeah. Think of how you can facilitate a deal with them being on their own, but you guys having a relationship. That's the job. I think that's the game. And also the average Nigerian is good way.
I will illustrate with our business people, right? Because the average Nigerian is fine with 100% of 10 million. And telling me to come and do 10% of the 100 million. It's preposterous, but it is what it is, right? I will face what is reality rather than what ought to be. There's no point spending time on that. You know, we have spoken about, and I'm really glad you asked the question because we spoke about partnership, of how people approach partnership very wrong. In what you're speaking about, you will always hold a higher leverage than that other business. And it is only trust that is built that will make me say, I know you hold a higher leverage, but it won't come back to hurt me. And if it comes back to hurt me, what are the mitigating factors that will compensate me if such a thing happens? If you look at different deals in terms of, just look at merger and acquisitions generally, right? Businesses acquire people for different reasons, right? And mergers are also done for different reasons. One, you see acquisition is done for business expansion, right? So people buy out other businesses to expand. So that's one partnership, right? They literally buy them to expand and they've integrated into the other thing. Whether it's cash, whether it's shares, stocks, and all of that, that's another conversation, right? And there are different reasons why that happens. The other one is merging, right? Businesses merge together in order to reach a bigger goal. But that's the right, they want to scale. Totally different. They know that I can't run alone. But remember, I'm not trying to come and convince them. We have that independent understanding that we are better if we go together. So we merge and then we go for a bigger pie. And most of the time, they already both have exactly what they want to put. It's not one party that's saying, I want to go with that. Except you are able to be a very good salesman, which I spoke about, to sell that vision to that person and is ready to run with you. So if you look at our business, for example, so we're an advertising technology company, right? What means that we have the technology that allows brands and businesses or tech startups and all of that to reach their marketing or business objective using marketing channels and technology. So the Google Ads, we have similar solutions like that, RCS. We have reseller solutions for resellers of TikTok ads, Telegram, and a couple of other things, right? When you look at the market landscape and the different players and stakeholders, right, there are brands directly, which is tech startups and other things, right? There are marketing agencies in between, right, and advertising agencies. We can either go directly to brands, we don't need those guys to do it, right, and go directly, or we could go to say we meet advertising agencies, which has a cluster of distribution, like you said, right, for your situation where they have 10, 15 brands, right? We have a solid partnership with one, right? In that situation, we can access multiple brands without having to think about resources for each person, right? But it's when we have conversations like that, there's risk exposure. Because what happens if you work with agencies for 6 months, right? And then you just wake up tomorrow and you cut down the agency, right? And you work with the brands directly.
It still comes down to that.
Exactly.
Harmonize that interest. And to be honest, I don't think you can do it under like a corporate holding structure. You have to do it based on the deal sharing agreement at first.
Margins and things
Exactly.
like that.
So to just be the deal sharing agreement, and I think that's where you can build that trust. You're not going to do it from the corporate. Just take it as you guys have one. It's a partnership. You guys have that deal, and here is the economics of that particular deal. Can we work together? That is where it needs to be. It can expand from that. It can expand from that, but I don't think you can.
Hi, good afternoon.
Hi.
Thank you so much for your thoughts. I have a lot of questions, so I'm just going to listen a lot. Hopefully, you answer some of them without me asking. So, I have a problem. I have great ideas. They're very easy to come by. Before now, I was really attached to my ideas. So, I have started and run 2 businesses, failed. I'm on the 3rd one, struggling but alive, profitable, small. But now I'm in a phase where the new ideas I'm having, I am in no way attached to them at all. And in fact, the one that I'm working on, I set a timeline to say, if I don't make a headway in 3 months, I'm out. I'm doing something else, right? I wanted to know how you would think about it, because for me, what my goal is I want to build something that I go all in, right? But I'm also at a point where maybe I'm not, what's that word? I am not 100% into the fact that this thing, if I go all in, I have the resources, because I see a lot of the things I do not have that will make going all in a very big risk for me to take on. So I hope it makes sense. But what I'm trying to say is, what would you tell me really? And my current standpoint of, I am not attached to my ideas anymore or my innovation. I just think of them as projects. If I can do it, if I see profit, then fine. If it's not, I leave it and I move on to the next thing until I find something.
Let me just kind of like say a couple of things on my mind. You guys can just kind of So a couple of things. Focus is about elimination. The ideas,
Can treat that.
the ideas are nice to have. The main thing is execution. When it comes to execution, what works will set you free. The truth will set you free. So it's not even about being attached. The one that works, that will be the one that you will flow with. So in between that whole point of you having ideas and you're experimenting, because you're going to experiment to see what works. The one that works, that's the one that you're going to push on through. And as it's working, you still go back to that team. Focus is about elimination. I think that's how
So I'll take it from a point of view of working with, like, like you said, working with like CEOs and all, and that's the kind of problem they have. They have a lot of ideas, right? So they are running with it and like, we want to do this, and I'm like, let's finish what we're doing. We need to focus, because if you don't focus, you won't get anything done right. Like, you literally wouldn't. You wouldn't spend enough time doing that thing. There's something called compounding. Like, there are some things that you have to compound it. You would leave before the benefits of compounding start taking effect, right? If like you're investing 100 naira every day and you expect to see it on year 2, your compounding tipping point might be year 7 at that point. But if you keep moving 100 naira every day, every year, you would have a problem. You have to go with strategy, eliminate, make sure your business fundamentals are understood in terms of the market potential, right? And validation in terms of, does it actually work? Is somebody paying for this? Not my brother, not my uncle, like somebody that I don't know from anybody actually came around and I paid for it. I was like, that's the best way I validate it. I don't validate like I told Daniel or like told him. Like, somebody walks in here that has never heard my name and like, oh, I love this, I would like to buy it. I'm like, I have money in this thing, right? And what's opportunity to scale with that? So I don't think it's a good thing that you jump right ideas. I think you need to really focus and do what has potential or has shown potential at the validation point of view. You can experiment, but when you find something that works, stick with it long enough to see the results, and it has the market potential to make sure that when you stick with it, it's actually because some businesses have like cap. There's literally nothing you can do. The type of business you don't go more than a certain time, right? But if you have the potential to do that and you validate that, then spend time doing that very well.
I think maybe just to add to that again, just to make it very visual for you, so that maybe it can be a reminder. If you build something, or you think of an idea, you're executing on it, and people can't pay for it, it's a work of art. It's like this. When you build it, people say, oh, this is valuable to me, and I'm willing and able to pay for it, not just once, but recurrently, and that's the business. Once you get to that particular point, just think of it like a castle.
Good afternoon. My name is Adeyemi. I've previously built a value-added service platform, and currently I'm working in growth and partnership with a logistics startup. So my question is, I have two groups that I'm currently looking at towards growth, which is the courier business and the normal people, which is the end user. And my question is to Bukayo actually. In a business sense, which one would you advise that I go for? And how do I position this to an investor or the founder as to the reason why I am picking either of these particular set in terms of growth? Because, we're starting from scratch. So I'm torn between picking, the end user or focusing on the courier business. Thank you.
First principle, I think you mentioned it at the beginning. The very first principle is right. It's very easy. There's something about data and it doesn't care about your feelings. Like, it doesn't care. Like, your feelings don't count when it comes to data. It's there, staring you in the face. There's nothing you can do about it. You can decide to turn the blind eye and run. It's fine. That's not the problem, right? It will fail. It will definitely fail. There's nothing you can do about that. You need to go to first principle to say, why do you want to, when it's career, right, and end user? So think about it in resources. A lot of people think about resources just in like financial, right? But you need to think about resources in time resources, financial resources, human resources, as well as expertise, like domain expertise resources. Okay, those four categories. What's the market opportunity for the courier and end user? Right. First define that. You've not chosen. Get your market research done for both. Right. Once you've clearly understood what it will take to service an end user and what it will take to service a courier, like I'm not sure what you mean by courier, but logistics courier. Okay, yes, exactly. Courier companies, right? Then you now look at your data. Which one do I have capacity to service right now? In terms of money, in terms of time, in terms of domain expertise, understanding how to do it right, and which one has the capacity to scale? Because you mentioned investors, right? Investors care about markets, scaling, and things like that, right? You might be surprised you might start with one today, and when the business goes to a point, you are able to add on the second part, or you might never even add on the second part and you decide to go for that. Also, because there's a lot of things, right? What's your differentiator? What's the competitive advantage? Are they players in different markets? What are you going to do differently? There are a lot of players there. There are not a lot of players. How can you set aside? That's like it's a very business strategy decision. But go back to the first principle. Highlight all of those things for both parties and look at it based on the resources in those four categories to see which one you can do. If you highlight both and you define those four resources for both sides, you will automatically see what you should do. You would see it to stay in the face. There's no need. I'm not even going to comment. It's just going to be like when I talk about cost benefit analysis. When you have torn between it, just figure a white paper, draw the line, option A, option B, write it. It's scary. You can now decide to say, I want to choose this for sentimental. No, Allah, you see shake it, but you come back, right? But nobody will tell you. So that's how I think you should approach it.
The truth will set you free.
Exactly. The truth will set you free.
Okay, so I'll just read out some of the questions you have online. One, VCs typically won't invest unless the project has already launched and it's generating at least 5K in monthly recurring income. So that 5K is dollars. How can startups finance their projects before reaching that stage beyond just bootstrapping?
So I get that question, and it's a valid question. I think VCs are the first institutional capital for most startups. Prior to VCs, it's more personal per se, or community, or it comes from your own pocket in many respects. There is a layer before the VC that combines early stage, not just angel investing, maybe it could be incubators, it could be accelerators that have capital, have other resources in terms of they can connect you to talent, they can connect you to infrastructure and the likes. Those would be where you go out. But other than that, I think what has happened in the last couple of years in our market is at the peak or at the high of maybe 2022 to 2023, where interest rates were close to zero. Capital flowed everywhere, anywhere and everywhere. If you want to know why your crypto was or there was money flowing around, it's because the interest rates were low. When interest rates started tilting up, then capital becomes smarter. It goes less into places that it does not understand or it does not feel that something they will get anything from it. And Africa, to an extent, suffers significantly. I think 2022 we used to have up to 5.2 billion flowing in, and it didn't just flow because there is capital. It didn't just flow in and stop at maybe the top for later stage, Series C, Series A, Series B. It used to flow down to the bottom, and there were operators that were facilitating that. But now, one of the challenges we're facing is, first of all, capital is not flowing down, but at the same time, the operators, there used to be, in the past, there was Get Equity, you could facilitate the community around. Microtraction was key at that particular early stage deal. Hook is another one. YC was very present. So it's not, the point I'm trying to make is that it's not necessarily on them, it's that the dynamic has changed so much so that it's not as easy. So that will require them to kind of like reframe their approach to the market per se. If that makes any...
To add to that, right? And I understand startups, right? Like, they need money to scale to the next thing. But I still always like business, right? I like business as business fundamental. To say, if nobody's coming to save me, like there's nobody coming to save me, how can you think of something to still grow your numbers so that you can start getting attraction of this businesses, right? Because there are two things, right? And they are just two realities, like you mentioned. There was a time where you had to put in not minimum but a lower number of efforts and numbers, right, to get an outcome. Now you need to do more to get the same outcome. It's like our naira to dollar kind of thing. The same amount of money to actually get to exactly where you were before, but you're doing a lot more work in terms of USD value. So face the reality that it's a tougher market to raise money. That's just the truth, because the money is not as available as it used to be. So you then have to think creatively of how can I grow my business numbers. Just think of it as a business, or how can I find, if funding is so critical, how can I make find money in another angle that doesn't have to do with VC. Maybe it's debt, or maybe it's what's this thing called when you can clear invoices and things like that. Just find a way that you can still keep your business afloat and growing, so that you improve your business numbers to make it more attractive for that VC funding. That's my. I want you to face the reality of. I don't know who asked the question, but I want you to face the reality of what is staring in your face and find how to navigate that. You can either sit down and feel like, yeah, it's unfair, blah blah blah. Yes, I understand. I don't feel it, but I understand your point of view, right? Because I'm not in your position, so I can't feel it. But you have a choice to say, how do I still make this work with the reality? Do I close down my shop, or do I find a way to still find a way to make this work? Face the reality.
All right. Okay. So the other question, I think this is for Daniel. How do I source technology talents, either on a full time or contract basis? Yeah. Or how do you find tech talents?
Biggest thing is referral now. Like, I know a guy. I know a guy that know a guy. That's the and just jokes aside, it has helped me. Then funny enough, another way is actually Twitter. Funny enough, I think the best talents I've gotten mostly off Twitter actually. Um, our lead front end engineer, I posted something in 2021. I need a front end engineer. He reached out to me. He was in Uyo. He brought him to Lagos. Then he brought someone else from Uyo. And back end engineer, oh, that's a different story. I think even a lot of people, but even mobile, I don't know. But first point is referrals, really. Who do you know that has done? But people are very skeptical about referrals these days. Like, let them not drag me for giving you bad talent. But I mean, I don't know if there's a playbook. Before it was Andela, right? Andela graduates, everyone that's come off Andela, people source for them. For people that have gone through something that has to do with Andela. But now it's just in-person conversations for me, really. Or if I can't find anybody within my network, I just go to Twitter. I know that there will be somebody that just needs one small chance, right? There's always that person. You would see like a whole thread of, the money is small. That's if you put the, what's it called? The amount, the salary. People, the money is small, but there will be that one person that will enter your DM. I can do this thing. So I don't know. There's no playbook, but that's what I do.
Okay. So I think I'll ask that question I wanted to ask earlier, which is, as a founder,
Communication.
yes, communication. Developers are notoriously famous for that. They do not always communicate very well. How do you manage that? And I guess maybe even for a technical talent as well. How do you communicate with the founder you're building for?
Oh, this one is it's tough. Oh. It's tough. Yeah, tech people are notorious for it actually. Communication. Do I communicate? Well, I found out I might be listening, but I think I do. I think for our engineers, right, and product people, carrot and stick. carrot first. If you communicate well, you do this. If it happens more than 3 times, where like you're found wanting for communication related issues, becomes a KPI problem. It's working. I don't know how it works because right from day one, I know I've always known that it's something that engineers like have issues with, like communicating both up and down. Right, you are a team lead. You feel like you can do everything by yourself. You don't carry your subordinates along. You are a subordinate. Sometimes you feel like you can't carry your team lead along. I think for us to introduce it into like KPIs, soft skills, right? With me, working with me is your technical skills. I'm not going to then foul language, but your technical skills don't matter to me so much, right? If you're going to stress me, then I can't work with you. It's as simple as that. And yeah, that's how we've been recruiting, right? You can be as good as whatever it is, as sliced bread, but the moment there are things like communication, integration, you cannot onboard onto a code base real quick. That your technical skills are redundant and it's rubbish, right? So if I notice someone could potentially be a problem when it comes to communication, I introduce it to their KPIs early on, right? You see it in your appraisals, right? So you can give me heaven and earth, you can build a lot, but if I know communication is a big part of your issues, it takes a higher KPI weight for me. So it's like you can give me heaven and earth in 1 quarter, but you did not talk to me when like things were going crazy. Like you thought you could do it on your own. Don't worry, KPI issue. That's why that's the in extreme cases. At first, it's like a conversation you need to communicate. But then, if it's like it's looking like a problem, it's a KPI thing. And I mean, if it's recurring, then we just can't work together. It's what it is. So I introduce like rewards first, right? Do this, you get this. But if it's looking like a problem, then yeah, mistake.
Do you think that can be taught?
That can be taught.
Yeah, like the ability to communicate
I,
effectively.
I think so. I don't think I was born a good communicator. I picked it up over time. I mean, it affects my source of income. If I don't communicate well with Tunde, I guess, or any other person in the team, then I'll be out of. I'll not be able to afford house in Bagada. But anyway, but yeah, I think you can pick it up. I think it can be taught. I think it can be forced and drilled into people. Right? Yeah, that's what I think.
Yeah, because I wanted to say.
Yeah, so I don't drag developers too much, but yeah, I think I like the model of communication. And I'll tell you, like I was coming today and I sat in front of, so it was supposed to be the reporting portal, API integration and all, and the front end, and I told her, see, you can't manage me because I feel like developers do that thing. They'll manage you because you don't technically, maybe you don't have like enough technically. I'll tell you, you can't manage me. I've gone to learn Python for somebody before because I wanted to manage that person. And there was a lot of stories. So I went to learn the fundamentals. So you can't tell me, oh, plug. I'm like, no, that's not true. Don't manage me. And what I did to her was I said, see, just tell me where you have blockers, where we are, and when you deliver. You don't have to promise me heaven and earth. I just need full transparency. I guess what she told me, okay, Bukayo, this was actually it. We've done this. This is returning data for the API, but I'm having problem with this. I'm like, that's fine. And I agree that I think I'm going to implement that communication path into the developers KPI because it can be improved. Like I didn't learn how to speak from day one, right? You learn and you improve from that part of things. So
Okay.
yeah, they stress us.
So I think we'll take one more question from the guys online. So I don't know, a lot of people are asking questions on legal registration. We don't have any lawyer on the panel, so I don't know. Use Google. Yeah, so this person says we are an all-in-one platform for ticketing, voting, forms, and bookings. We've had traction on revenue and user base. How do we position ourselves for VCs?
say they have traction. What does traction mean?
Well, they did not specify here, but it said traction on revenue and user base. I guess they have a couple hundreds of thousands of naira as revenue, maybe at least 50 users.
Okay. I think the rules don't necessarily change from the way I see it. It's still product market fit reflected in traction, driven by who, through what distribution channels, and what are the outcomes. So what I mean by that is, okay, he has a ticketing platform. Also considering what is the competitive landscape for ticketing platform, and what is the market, the market the market for ticketing. Is it the local market, or are they looking to expand internationally? Exactly. So there are a lot of questions to kind of like bake into it. Is this something that is defensible? I'm basically just saying what will be asked during diligence, because that's the benchmark in which you're going to take a bet on a particular deal of such. The fact that they have traction, is it financial traction, or is it customer growth or market share? What exactly is that level of traction? How much have they raised in the past, or how much have they put into that business themselves or through their own network? Because those would be the benchmark to which it will attract. But I think the way I would kind of like summarize this is, depending on what the criteria is, and when we're looking at traction, the financial benchmark is, if some people are attracted to see 5k MRR, you don't need to explain too much to them. 5k MRR gives them confidence that they can take it back. Some people are 50 to 100k. That means unless you get to 50 to 100k, the chances of you convincing them is slim. Some people are interested in how much are you growing month on month. So you've gotten to, let's say, 5k, but in the last couple of months, no, let's say in January you were 5k, but in the last couple of months you've been ticking up month on month. So that growth in itself can be a good validator to say that you might be 5k, but the market is telling me that this could be something bigger, and I can actually take a bet on that particular deal. So it still comes down to what the benchmark for each investor is, and whether you've met it. Sometimes if you've met the thing, like I said, VC is institutional, so it's not built to think like it's familiar with you. That's why they advise people to raise from, you bootstrap or you raise from your own community and click before raising institutional capital, because then by the time I get to VCs, does this deal make sense for me? Can I work with this person? So that would be the way in which I would actually approach it. Each particular investor that they're speaking to, they need to say, okay, what is the benchmark for it? But growth, but this is not to say that traction and growth are two things that can attract me, especially if I see, I may not be. So let me give an example. So at Chui, it's a Pan-African seed fund. We're based in Nairobi, Kenya, and Lagos, Nigeria. We made investments across sub-Saharan Africa. We back African founders building tech-enabled solutions for mass market. Our sweet spot is the seed stage, revenue generating, growth, and so we do have allocations for pre-seed, but it needs to show something significant. But there are cases where one can map out the attractiveness of this business, and these are qualitatives. They are not quantitatives. You can just look at a particular, if something is highly, there's something called Pekin's law, where they say that the higher your tech edge, the higher your market edge as you go further. So if you see something that is innovative, it has defensibility, it has tested in the market, is bringing in something, and over the period it has been growing, even if it's not up to our benchmark, or something to look at. So traction, what do you call it? Traction but showing progress. Traction but showing progress can be attractive, even if you don't meet each person's benchmark.
Yeah, good afternoon to you guys. My name is Yinka Johnson. I'm the founder of a health tech e-commerce platform, and I'm here to solve a nagging problem. You know, what actually is happening right now? Actually, we've even submitted our pitch deck to TechPoint for the past 2-3 months. We've been slowed down for about 6 months, and I'm really leveraging on what he talked about, hiring and growth. That's really the problem. You know, let me give you a short story. We're a team of 3. The technical guy we have, he called me this morning. I said, God, where have you been for the past 2 weeks? And this story has been the same thing for the past 6 months. So my question now is, like you said, how much, on the average, how much does a technical person charge now for what we're part of an accelerator. We've had traction, sales in numbers, and things like that, you know. So how, you said X, but I'm really doing almost everything. I built this thing, and I want to retire. I'm an older founder. I'm relatively older than most people here, But this is something, what we're building, I know it's been validated a number of times. It's good and all that. I could even just get a younger person, which is why I didn't even come to pitch. I need a younger person to even come and pitch. I'll be there, anything they ask, And I think we'll be able to grow much, much faster. We'll be really slowed down. So again, my question is to get a younger co-founder that is technically savvy so that we can really move, and then what's the average, how much do they charge now? How much, so that I know what we have, I know what we have, so I know what to do, and I know where to ask for funds in a way, you can't beat experience, those are my questions, please, so that we can solve this problem. I'm getting, let's move. Like, I go and relax, I worked in government and in private sector for about 30 years. I got into tech about 10 years ago, but I'm passionate about it. You get my point? I have 1 or 2 other things that, but I want this thing to succeed. Thanks a lot. Yeah.
I don't know how you're going to approach it, but I can make a recommendation to where maybe you can source that level of talent. But that will be after this. I can make a recommendation. That will be after. The how much?
Okay. I'm going to use myself as a case in point. I'm not going to say how much first. But I don't think it's necessarily about the how much first. If you're going to get me to do anything today that requires building a tech startup, I must love it. Like, I must love the idea of it first. That's the first thing. Now, when we've got past the stage, what next thing I'm thinking about is, do I want to do this thing alongside what the other thing I'm doing, right? Which is managing another tech infrastructure. Now, when I've answered that question, it now boils down to, okay, maybe the how much. I mean, for tech startups, I don't think you'll be able to pay me immediately, right? You might not be able to afford what I would put. So it's like, I love it. Then I say, you know what, this is how much I want, and this is how much I want in maybe equity. And am I coming in? What are the things I'm going to do really? I think those are like questions more than how much, because I can tell you I want 10,000 naira, and I'll do the work of someone earning 5 million. And I can tell you I want 5 million and I won't even do jack. Right. So, but I think the first thing for me is actually uh, buying into what it is you're building. And a lot of engineers, unfortunately, are not very disciplined. I'm not going to lie. We take on so many things at the expense of so many other things. Yeah, and I think when building, that's the problem. I've been in the same shoe where I took on so many things and I had to say, see, I'm sorry, this thing can't work. So at the end of the day, I don't know how I would answer. I can't answer the how much question because I'm very sure if you go around this room, right, people have different here. So yeah, whether you are coming in as a co-founder or a technical partner or whatever, there'll be different rates. But I think for your issue, I've seen it one too many times. I've been on the end where I was the one giving the issue. I'm sorry. All right. So, and I think just from my own experience, a lot of times is time. Like sometimes it's discipline, right? Some other times it could be like I just don't love what I'm doing, and I don't know how to communicate it. All right. So I think those are like those might be the issues as opposed to how much. That's what I'm saying. Because if I'm coming into something that is basically tech style startup and there's still some level of uncertainty, why am I asking for heaven and earth? Do you get? That's someone. I mean, I don't know how you get them. Is you just? I mean, I don't know if anybody knows. Anything I think Chioma Nana, I think something like that. She's been looking for a technical founder. I've been following her stories for like over a year. I think she eventually found someone, but the person is not in Nigeria. She like you could see on her post, I am looking for a technical founder. Same problem. She found someone, right? There's no blueprints, there's no playbook. As if when you get that person, you know, right? And lastly, I think if getting someone doesn't work, don't quote me anyway, but maybe you can outsource the engineering. But don't quote me anyway. If maybe because you said you can get the money, yeah. There are so many outsourcing firms that I'm not going to do marketing for anybody, but there are so many, right? That maybe afterwards we could, yeah. But there are so many of them out there that would maybe tick boxes for you or give you someone that would be accountable, right? Just onto the point where you've like built something worthwhile, and maybe along the line you find someone that will tap into the vision and would come in, maybe. But for this particular problem, the quickest way to solving it is to just acknowledging that this issue is there, find other alternatives. You can't spend so much time finding someone that would trust. It's like trying to get into a relationship, right? It's like looking for love. You like waste your time. But yeah, do you understand what I mean?
Okay. Sorry, Daddy. You were not here when I introduced myself. So, for what you just said, that is why I started my company. Okay, so I actually
See what I was saying.
I so I pitch for people, I represent them, I connect them to. That's why I started the Tech Hub. I have the online community of over 30 talents where I just started. So I have over 30 talents and we have the technical team. For example, my new client that I just got from the Kogi state government. So he needed somebody to undo it. Like now, by next week, I'll be representing him in Kampala, Uganda. So for this game pitch. So people like you are my clients. You know, the people I'm looking for.
I love it.
My target audience. So, Daddy, maybe after this, we'll talk.
Exactly.
Thank you very much, sir.
Very, very fast.
Yeah, good evening, guys. So, before I ask my question, I'd like to make a suggestion to a question someone asked online. regarding, I think the question was something like, how do I get funding except bootstrapping? So the thing is, sometimes I try to tell some of my friends who are founders too that when you're starting something, most of the times you don't actually need investors' money. Yeah, because most Nigerians we have this mindset of once you start something, you're looking for someone's money to like push it. But at the end of the day, yeah, as my boss here said, he said find a way to like have this mindset of there is no way out. In fact, investors shouldn't even be the first thing that comes to your mind when starting a business. Yeah, most of the times what you need is client and customers. So find a way to get your product to clients and customers. Sometimes you can even it can even be through a WhatsApp platform. He made mention of a company, his company that had started something and for 1 year they didn't have technology, they were just doing the analog thing. So most of the times as founders, what we need is clients, customers. So find a way to get your product or your service to the right customers, and from there they will pay you, you get money, you save, you invest back in your business, and you now realize that you don't even need investors' money initially. So I just wanted to add to that. Then my question is I would like to know what is one mindset shift you needed to make that changed the way you saw growth and opportunities. The way you saw growth and opportunities, or what is one mindset shift you think founders should have? Okay, first, let me just say, what is one mindset shift you make personally, and what is one mindset shift you think founders should have that will change the way they see growth and opportunities?
In any respect, this is like a personal question. For me, I operate with a lot of framework, but I'll just give you one that's actually significant. Signal over noise. For example, noise is everybody on Twitter saying this is that, and everything. Signal is dividend that was paid to every single person that is a shareholder in UB as anyone. The question now is how many people are owners of those particular shares as compared to complaining about those particular markets. So at the end of the day, and it's not easy, to be honest. I mean, if you come from the perspective of this thing, what do you call it? This stuff is not right. This thing should be better and everything. There's a quote where they say you have to see the world for what it is first before you can think of what you think it should be. Like before you move on to what it should be, and that it comes to the core of signal over noise. What is the main thing? The main thing has to be kept the main thing. Not like it may not be palatable to you at the beginning, but does it work? It's the same. The truth will set you free. It's very evident. So signal over noise, and that goes back to that narrative that I gave you. That if it's going to be signal over noise, that means you need to be eliminating and sieving things away on a consistent basis and focus on what works.
It's tough actually to find one person as in. I think business it's very close but very business fundamental, right? I've worked much more on like businesses that are just core businesses. Like when I worked at Eskimi is in 130 markets, right? I can tell you that Eskimi has not raised a dime today, like in terms of like institutional investments to raise $30 million or 50 million. If that company decides to raise today, they probably like raise $1 billion minimum. And there was something about Vita's the founder. He is very business driven. This is the market we want to enter. What do we need to enter? What's the cost? And how can we make money? The business is never built for money with external investors. It's always good when money can chase you because you have the numbers and validation. There are like lots of businesses like that because that's the core. And that mindset has really taken me to Rome. When I joined this company, we literally was nothing, right? Like there was the business unit was different, and then we grew it. And every day, I never had to think about investor because there was no investor. I was reporting to the board and to the CEO for the business unit. Is how do we grow this and how do we make it work, right? So business fundamentals. I always say validate before scaling. a lot of people think about just scaling, right? Validate before scaling. And how can I do this with the minimum resources available first? Like we do different products, but I can tell you before you see the product mainstream, we've tested the easiest way. And I like the way to not do Sycamore too. The easiest way to, like, I was in a meeting with director of Lapo yesterday, Lapo MFD, and so they have over 500 branches in Nigeria, right? And they decided the business segment they will go to is the bottom of the pyramid to solve that problem. And now they're trying to move to a digital, right? But you need to convince them because the business fundamental is showing they're the biggest MFB, whether you like it or by asset and by number in Nigeria. Like with the joke of Lapo baby, Nepo baby. They have Nepo baby money. I'm sorry, man, right? And they're called Lapo, right? But what has motivated me the most, apart from Sapa, because Sapa will motivate you, I can promise you, like, you don't want to be on that side of things. It's really solving like businesses. I like building businesses. Yes, I've done marketing, I've done growth, but like I'm much more of a business growth engine person. So I don't think from a marketing, from a product, from an engineering, from an investment. I literally think of how am I able to sell bread and make a 20% or a 30% margin on that, and how can I grow that bread that I'm selling, right? Now, every other thing then comes into play how to grow that. That's where you think about marketing strategy, tactical deployment, product-led, sales-led, blah, blah, blah. But a lot of times you need to think about that first, not think about my product-led before thinking about your fundamentals. So always go with your business fundamentals.
So I actually want to ask, in the pursuit of happiness for startup founders, do you advise them at the very early phase to get like a side gig, like probably a 9 to 5, or they should stick to the entrepreneurship? He would argue that stick to the entrepreneurship. That's why you started. If you are going through a lot, go through a lot in entrepreneurship. How do you cater for your needs? And some as well that I do know, they'll be like, Sam, you need to get a 9 to 5. You need to also cater for your needs. So these are current realities of founders, right? They want to cater for their needs, and as well they also want to grow the business. So what is right?
You're right or wrong. I'm sorry, I'll take that right. Life is very contextual. Like you need to look at your life reality. That's the truth. He would say that, right? But he has safety nets in goods, right? No matter, like a lot of people say, it's because somebody is privileged. I'm like, every single person in this room is privileged to some extent. Like, no matter how bad you think things are for you right now, you are way better than every other person that can't even, they don't have the money to come to the venue. So recognize your privilege and understand how you can apply that to your life context. There is no, I won't tell you get to 9 to 5, I won't tell you don't get a 9 to 5, because there are pros and cons, right? The pros and cons is if you have a 9 to 5, right, some investors will not invest in you, or they don't see that full-on commitment to that, right? To say, like, but I'm also not going to say you should not do 9 to 5 when you have to pay your bill at the end of the month. Maybe you are married and you have a wife. Life is so contextual, right? You don't have validation. You don't have the wrong way. Like, okay, you can decide not to do 9 to 5, but you have money for 6 months or 1 year. You will be fine, so you can focus on that. Understand the context of your. I'm not going to give you a direct. Understand the context of your life and how much risk you can take. Because it's also fine to not have a back, like, what's it called, something to fall back to and go all in. But that has to be coming from you. I can't tell you to do that. I can't tell you to risk that. You need to decide to say, very cost benefit. I really love that thing that I tell when people ask me a lot of things like that are contextual. I tell you, bring out a sheet of paper, draw a single line in the middle. Like, do it if it's really contextual. Write the cost, write benefits. What's the cost of having a 9 to 5, blah blah blah, not having it? What's the benefit of that? Which one can I live with in these two? And own it. Own whatever consequence that is. The consequence of action or inaction. Be ready to live with it. If you go all in and you don't have a 9 to 5, know that you're not going to have a lot of money, know that you're not going to be able to do certain things, but there's a possible outcome that you would actually grow the business. And if you don't grow the business, you know you're going to take a 9 to 5. If you have a 9 to 5, know that you can't go all in as much as somebody would be able to go on. You don't have the flexibility to do that because you have to do 9 to 5. Just know the reality and choose which one you can live with. I can't give you a yes or no answer for that.
Okay, does anyone else want to weigh in?
I think way I would actually break that down is resources. There has to be kind of like a good sense of what your resources are. Your resources could be money, could be time, could be networks, whatever. That's on one end. Then the utilization of those resources. You could have, let's say, you could do a 9 to 5. Your 9 to 5 ends starts from one time to a particular time, but you have maybe a couple of hours during the night for you to operate. So that's in a scenario you're utilizing the time, but you're still operating 9 to 5. Right? Then the other aspect I will add will be on timing. To be honest, it's not, there's no straightforward answer to this particular stuff. And the fact that you come out and say that, oh, I've kept everything to the side, I'm going to run a business. The business will still show you that it's business. No, the fact that you planned out that I'll grow this, I'll do this particular stuff. The business does not care about that particular stuff. So I think I've just narrowed down to what do you have, what can you utilize, how can you utilize it, and you ask yourself rationally, how can you time things? I mean, is this the right time to do? So if you, to be honest, a lot of good businesses are run by people that are older. I think the general theme is that every young person is a success, or that history shows that every young person has been a success in business. If you go and check the average age and you check that business that you admire, they are older people. But you check it, that person could be a professional operator, grinding it out for a couple of years within another establishment, and they'll be like, okay, I think this is time for me to do something on my own. And at that point, they have a couple of money. There's money in the bank. Even if they have money, they have networks. So those are ways in which I think.
All right, so I think we can take two questions. So who is taking the first question?
Good evening, everyone. I'm Abdulbasit. So, we are currently building solutions to facilitate rehabilitation from addiction. So, for us, because we are operating in the health tech sector, and we all know that health data are very delicate, and you need to be careful. So, like she was saying about probably you'd have to look for customers in the early stage just to make money. We can't do that because any small, in fact, I was still listening to the commissioner of science and technology saying you better be careful, especially those of you that are building there, so you don't get yourself in prison. You get, so because you want to build the minimum thing that you can do to get traction and the like, but still you are risking prison if you are not careful. So and so you mentioned that they have fund for Pisi. I don't know if you can give more insights on what are the requirements for your proceed funds, and also if you can give more insight on safe. Like currently I've been trying to check out, because I'm also trying to look at what is the benefit of using safe for the investor side, because of course it's a benefit. It's okay for me as a founder, but from the investor side, so how does it protect the investor?
So for us, the benchmark is high. It's not. It's quite high. I think I labeled out that the only thing that the benchmark for Precede from a financial traction standpoint is quite high. The only thing that we can consider might be something with a lower traction but higher growth rate, and also defensibility from a tech and competitive standpoint. It needs to be core to that particular thing. I don't know if it's the business you're running. I don't know whether in a way you're evaluating it while saying it. You're evaluating. I'm just speaking to your business, like the way what you just explained, and whether is it actually a business or is it a cause. I think it might be whether is it a cause or is it a business. There needs to be but it's the customers that will tell you whether it's a business. You are thinking it's a business, but the customer should tell you. Okay.
the rehabilitation.
Are they paying for yours?
On a normal day they pay. Even for physical rehabilitation, for 3 months I visited the facility. The guy said that his own is like almost the cheapest amongst the private facility, and say they do for 3 months pay 4 million naira. So on an average, how many people can afford, even for government? Well, I think 6 months stretch, you pay 250,000.
Okay.
So of course, for you to be able to, and not like our target audience are those people under the bridge or something. No, those are not the target audience. So target audience are working class who do drugs, and of course their employers will not know that they do this, and of course, or probably because of religious doctrine, and like they need to recover.
How long have you been doing it?
No, we just we just concluding the MVP.
And you test it. You test to see whether what you're saying with the best arguments that you're making works in reality. You're saying it conceptually. Test it. If you test it, then you get to a point whether if it's good enough and people can pay for it, then they'll pay. You don't need to come to any person to even raise money at the beginning.
Like we need to put a lot of infrastructure to make sure that your data are safe, which requires.
What's your business model? Leave data infrastructure. You see, I'm sorry, this business. What's your business model? Leave infrastructure, data. What's your business model? What do I buy? What's your cost?
How do you make money?
How do you make money?
Exactly. So how we plan to make money is that
it's fine. If you have not figured it out, it's not a problem. Don't do that pressure. If you not figure it out, it's fine. But just explain what you
make money is a subscription model. So what happens is that you subscribe, then you have like access to different levels, like levels. So you have access to different levels. Okay, at the point you have access to a health professional for probably 3 hours throughout the whole month. So you know how you want to spread your section with the professional.
Telemedicine.
Yes, telemedicine. So you know how you will spread, and also because it is still rehabilitation, it's not something that can be facilitated online. So also bringing in the app centers themselves, so that there are some point that you still need that physical attention. So we'll be able to move you to, because on a normal day, a lot of people don't want to go to those places. Probably they have the ideas for them. But the fact that I need you come through the process, at least like you still want the process because you already have the feeling that it's possible. Then,
given this economy, is this a nice to have, or is this I need to have?
They need to have, because we have over 14.3 million Nigerians.
So if you break down each person's earning, say for example now, household income of so and so, by the time they slice food, slice transport, slice this, where would yours fit in that their? That's how. So I'm just trying to give you a sense of how you should approach it.
Yes. 14.3 million.
How many people in Nigeria have capacity to go for rehabilitation? Not people taking drugs. So people taking drugs are 14 million people. How many people, one, are interested to be rehabilitated? One. Then out of those people interested to be rehabilitated, how many people have the capacity to be rehabilitated? Two different things. Do you understand? You don't have to have the answer. I'm just telling you what you need. That's what we're trying to do. We're not trying to say, hey, it doesn't make sense. We're trying to say, think about this in your business model. That's all.
Then for the safe, essentially, safe, simple agreement for future equity in many respects. I think advantageously, what safes offer is the benefits are with regards to cost. Because if you want to price a particular deal, for example, legal costs might be so much that the deal will not be done and it's not taken off. But with saves, the cost aspect is actually the same. So the two benefits are with regards to cost and peace. It allows you to, sign an agreement with your terms clear, or your terms, put on the table at the faster pace. That's basically the benefit of both ends.
Well, like what is the benefit to the investor? Because
that's it. Speed, and I want to close a deal, but I don't want to spend heavy on legal costs.
Alright, so I'm going to assume there's no other question, and then we can move on. Perfect. Thank you so much. So you have a question?
Good evening, everyone. So my name is Ugo, and I want to ask a question for funding, regarding funding rather. So for an early stage startup, right? How does the idea of non-dilutive funding sound? So startup is just like trying to get traction. They're still in MVP phase, so they're still testing, and then they reach out to or somebody reaches out and says, okay, we want to invest in you, but it's going to be non-dilutive.
Grants.
No, no, not like grants. So we won't take equity in your business, but we will direct what you will do. Kind of. What does that? How does that sound like?
I mean, they want to run your business.
Something
With
like that.
you being part of.
Kind of like a sub under them, so they get to control or they get to have a say in something that or the decisions that you make, major decisions that you make with the company. Eh? Yes, they get a share of revenue as well.
So let me get you. Sorry, I'm trying to understand. They want to give you funding.
Yeah.
They don't want equity.
You don't want equity, so they give you the exposure that you need and the funding that you need in that moment. But for future projects, right, it has to run through them, kind of like a permission kind of thing. It has to run
So
through
your
them.
question to me is, what do you should
Yeah,
you
what? Yeah.
wrong?
Just
That's his question was about trying to distribute through other people that have their own establishment, and he's getting pushback. You're trying to build something that you see a vision, you want to control, you want to see it through. But the deal that you're going to get is something where you need to take permission to see it through. And also,
You getting anything out of it?
no, they're not getting. So what they're getting out of it is the equity is control.
Yeah.
Yes, the equity is
Will
control.
cripple you totally.
That's one a scheme.
That's
No,
money.
no,
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 they
no,
technically just bought your company.
No. What it is? So, RUN.
If you want something around, it's better to get an advisory person, not like an advisory that is not in an equity holder. That person is not giving you money; they're giving you that time. Or even that is still.
To be honest, be very skeptical when the interest is not clear. People, this idea where something is doing something for charity for you or for free for you, be very skeptical. Let it be clear that in as much as we are cordial, this is the value that is being exchanged. Let it just be clear. Because at that point you can actually, assuming you're not okay with it again and you need to pivot, you need to move on. You can only move on because we had value exchange, it's not working, but we can move on. But the deal that you're talking about, they are just selling to you as if they're going to, what do you call it, they're not going to take anything out of it. But I mean, thank you. Go on. Fast.
All right. I think we've come to the end of this segment, and I believe everyone who asked the question got value out of this. So thank you so much, Bukayo, Franklin, and Daniel. All right. Yeah.